Good morning, traders. In this video, we're going to go over the results so far of my small cap market open test trading. This is a plan that I have written myself that I'm test trading up to 100 trades or at least 100 trades. And at that time, we'll decide whether or not this thing is profitable. There's something called the law of large numbers. And generally, if you take something out to 100 tests, then you know whether or not what you're doing is work, or at least you can define the probability after 100 tests. That's really the idea here. So with all or nothing 2R trading, that means that every winner will win 2 times what our losers will lose. So in order to be profitable with all or nothing 2R trading, you need a win rate of higher than 33%. Break even is 33%. So that's what we're trying to figure out here. That's why we're taking this out to 100 trades. At 100 trades, we'll know what the win rate is. And if the win rate is above 33%, it's profitable. If it's below it, it's not profitable. So let's take a look at the results so far. We've taken 23 trades out of 100, so we're about a quarter of the way there. This is trade number 1. I am tracking whether or not this is profitable, or actually whether or not the trade wins or loses by whether it hits 2R or not. I'm holding every single trade to 2 times the risk of the trade. If you watch my live trade recaps, you'll know exactly what that's talking about and how I come up with the risk for each trade and all that kind of stuff. So, and I'm also checking to see, do they go to 3R, which is 3 times the risk. So all of that data is tracked over here. In the beginning, all the ones that were going to 2R were also going to 3R, but lately, I've had some trades that have gone to 2R but not to 3R. So that's why we're just tracking it and not just randomly holding to 3R. And this is up to trade number 3. I'm allowed to take up to 3 trades per day. If the first trade wins, I stop trading. If the first trade loses, I can take up to 2 more trades. If the second trade wins, I stop trading. And then the third trade, no matter what happens, I stop trading. It could win or it could lose, and that'll be it. Now, historically speaking, my third trade is my best trade, meaning it has the most chance of working out. So that's why I take that third trade. It gives me a chance of turning a minus 2R day into a break-even day. So let's scroll down and take a look at the results overall. So this is kind of more the cost of the test than the P&L, because we're just trading with one single share on every trade, and that's because we don't know yet whether or not this is going to work. So it's interesting that we're a quarter of the way through this test and we're only at 27 cents cost. So let's say that things don't get better, they just kind of continue as they are, then we can extrapolate this out and multiply it by 4, we're about at $1 there. So this thing could cost us as much as $1 if things don't get better. If things get better, we might actually make a little bit of money off of this test. The average of all of my trading days, the win rate is about 39%, which is profitable, but that number is not really that meaningful. What really tells you the win rate is this one right here. And we've won 7 out of 23 total trades, so we are just under break even right now. Again, it's too early to call it not profitable. You really need to take it out to 100 trades to know whether or not it's profitable. If you want proof of that, the coin toss experiment is a great way to do that. Everyone knows that a coin has a 50% probability of coming up heads or tails. But you'll see quickly, if you start flipping a coin and tracking how often you get heads and how often you get tails, that you can get a string of heads or a string of tails, sometimes 3, 4, 5 in a row, and that will, in the short term, throw off the experimental results probability. So even though you know the coin has a 50% probability of giving you heads or tails, you might be recording, a 20% probability of coming up heads or coming up tails for the first 10 flips or so. So that's why we have to take this thing out to 100 trades to find out its real probability. Once you've gone to 100 trades, if you go from 100 to 1,000 trades, the change in the probability is not going to be that great, and that's proven over and over again in statistics. So that's just a kind of a statistical fact. So that's why this thing has to go to 100 trades. So right now, the R value on holding to 2R is -3. So if we were trading with full position size, we would be down 3 times our risk. So let's say we were risking $10 per trade, we'd be down $30 right now. If we were risking $100 per trade, we'd be down $300, so on and so forth. And the same thing is true, but to a greater extent with the 3R. So right now, it's slightly less unprofitable, if that makes sense, to hold to 2R than to hold to 3R. So, and that's because some of our 2R trades are working and not going to 3R. So here's the win rate of each individual trade, and you can see that they do increase as I take more trades, and that's why I don't just stop after the first trade. And these first two need to be red. It's a mistake on my part. They need to be 33% or more to be profitable. Actually, they need to be over 33% to be profitable. And you can see the win rate for 3R is even lower than the win rate for 2R by quite a lot right now. But again, we're pretty early into this test, so those numbers don't have that much meaning yet. So hopefully this video is helpful to you. I wish I could show you that, hey, this thing is making money right off the bat, but you know, there's no guarantee of any plan being profitable. You really do need to take it out to 100 trades to know whether or not that's the case. And this thing could turn around on us. It's too early to tell at this point. So I'm just going to keep trading this plan. One thing we know for sure is that even if it isn't profitable, we're not going to lose a lot of money testing this. So we're going to be collecting valuable data that we can learn from, and we could either come up with a new plan or just decide that small caps are not profitable when you're trading off of a trading plan. So take that for, you know, a grain of salt, I guess. But with the mid caps, I was able to prove a profitable trading plan. So that's kind of what I'm trying to do here with the small caps. And the reason why I'm doing the small caps is because I know that is a more popular vehicle to trade than mid-cap stocks. So trying to see if I can help people that want to trade those make money and not blow up their accounts, because small caps are risky. All right, so let me know if you have any questions about this plan, the spreadsheet. If this plan is profitable, I will upload it to my Patreon. Right now, I just have a mid-cap plan, swing trading plan, and binary options plan that are profitable. And the website is patreon.com/tradingarmor if you're interested in that. I also have spreadsheets available just like this one. So check that out if you're interested. Otherwise, let me know what you think in the comment section below. Hit the like button if this was helpful. Subscribe if you haven't done so already. And as always, I like to leave you with always going to every single trade with a plan. Stick to that plan no matter what. That includes always taking your stop losses, honoring your profit targets. If you do that in the long run, you might be green. Take care.